Today, we're going to be talking about our Chenoa down payment assistance that Orion offers. A lot of you already know me. I'm Erin Harden. I'm an account executive at Orion. A lot of you know my inside account manager, Jared. We'd have to do a whole webinar just on him to explain how wonderful he is. So if you haven't called and introduced yourself to him, definitely do that. Here at Orion, we open our underwriters to you. We don't hide them from you. So you guys are going to also see our very seasoned underwriters listed at the top of your approval. Of course, you're hardly ever going to have to reach out to them because me and Jared pretty much have you covered, but we don't hide them from you just in case you do want to call and ask an underwriting question. Also, many of you know we have our help desk they're fantastic. These are some of the main contacts that you guys will need in working with Orion. My favorite is our scenarios desk. So if you haven't taken advantage of that, email the scenarios desk with any tricky scenarios you may have. They'll even check your income calculations for you as well. Definitely CC me on those emails because they're going to have great input, but I also may see something that I can add as well. So put us both on there. Today with our down payment assistance training, we're going to go over what is Chenoa down payment assistance, how to structure these loans, what the turn times are, our marketing materials that we have for you guys. And Chenoa has a lot of products, but we're going to feature two of them today that are working best right now in the current pricing environment, which is our 3.5% Chenoa soft second that works best with seller contributions. And then we're also going to look at our 5% Chenoa rate advantage that is really helpful if you do not have seller contributions. And then we'll look at some pricing examples and then we'll take questions. By the way, we have a special guest on with us today. Karen Thompson, our national underwriting manager, is listening in as well. And she will be helping me out with the chat today. So if you guys have any down payment assistance questions that you want to chat in while we're talking here, she's going to help me multitask as well. So thank you, Karen, for joining us. By the way, it's just beyond helpful to have you on these calls. So we'll go ahead and get started. What is Chenoa down payment assistance? So this is going to be assistance in the form of a second mortgage. So for example, if you're using this with FHA and you have a 96.5% first mortgage, then you have 3.5% down payment assistance. That will be held as a second mortgage. So your CLTV will actually be 100%. And we'll dive a little deeper into that here in a few minutes. These are offered through CBC Mortgage Agency. We are fully delegated with them, and these are available nationwide as well. So why originate DPA? And this is a question I get asked by brokers a lot. It's a great question. First, obviously, you're helping borrowers who need your help and need it most, but it's also a great opportunity to build new real estate agent relationships because I'm telling you, real estate agents are looking for this product. And if you have this as one of your tools in your toolbox, then that will definitely help you get your foot in the door. Also, as many of you know, the Chenoa caps the comp at 1.5% borrower paid comp. These are all borrower paid. They cannot be lender paid. But although you're taking what some of you would consider less compensation on the loan now, this is a slam dunk refi opportunity down the road. And we'll talk about how that works. But if you close them with Chenoa down payment assistance now, then you can actually turn around and refi them down the road and make your normal compensation if you choose then. If you're if you're paying off the first and second with a refi down the road and you're refining into conventional, you definitely want to make sure you wait the 6 months because as all lenders have that 6-month early payoff recapture period, you don't want to refi within that period. So conventional would require 6 months, but then if you're refining into FHA to pay off the first and second down the road, then you would want to wait 12 months because HUD has a guideline that says when you're doing a rate and term refi to pay off a junior lien, which DPA is a junior lien, there is a 12-month seasoning requirement. So who is a good fit? Which borrowers is this good for? So Chenoa actually opens this up to both first-time home buyers and non-first-time home buyers. A lot of DPA programs out there are only for first-time home buyers. Chenoa opens this up to both. This is for credit-worthy borrowers who are lacking down payment funds, but they do have money for closing costs and prepaids. And that is very, very important for you guys to understand, especially in the current pricing market, because these DPA rates and pricing, they do not have a credit right now in the current market for closing costs and prepaids. So these are for borrowers who maybe they have enough, let's say they have $8,000 and can cover their closing costs and prepaids, but they don't have $18,000, for example, to cover everything. That's who this is for. This is not going to be a great fit for borrowers who have like a 60% DTI. And part of the reason for that is these are higher rates. So when and we'll go through some pricing examples, but a lot of these Chenoa down payment assistance rates on the first mortgage are at 5.25% right now. So you got to keep that higher rate in mind when you're calculating the DTI. And also, we're going to talk about a soft second that you do not have to include the second mortgage in the DTI, but there is also a option where there would be a payment on the second where you have to include that in the DTI. So you really want to watch the DTI on these down payment assistance loans. Contrary to popular belief, these are not just for low-income borrowers. There are options for high-income borrowers that are above the traditional caps, and we'll look at those as well. So what's special about doing down payment assistance with Orion? Of course, you have the designated inside team, and we're here to support you guys. So obviously that's a major plus. As mentioned, we are fully delegated with full underwriting authority with Chenoa. So a lot of other lenders may have to package loans off and send them off to the down payment assistance program for approval. We don't have to do that. We do these all in-house. That allows you to close these quicker inside 30 days. Right now, we're at 1 day setup, 1 day turn time on purchases, including down payment assistance. So definitely there's an opportunity to close these inside 30 days. By the way, if you guys are wondering what our current turn times are, just go into our portal, click the turn times button. It'll pop it up. Those turn times are live and there for you to view. We have great technology. I would put our technology up against any other lender out there. Our company invested about $6 million in our portal a few years ago. It's second to none. And that really is important when you're working with a product you may not be that familiar with, where you're like, how do I structure these? What do I put in for the second mortgage? Actually, we don't care how you have it in your 3.4 file. So if you just have that first mortgage set up as a regular loan in your 3.4 file, that's totally fine. All you got to do is make sure when you're registering these, you select the Chenoa product as the loan purpose, and our system will actually override how you structured your LTV. We'll put that second mortgage in automatically. It'll put it in the CLTV. It does all of the work for you. So don't stress about how you have this set up in your LOS system. It really doesn't matter. Our technology is going to help you out and structure these correctly. By the way, if you're not familiar with our technology and you would like a tutorial, just scan the QR code on your screen that you see there. We do technology overviews every Tuesday and Thursday at different times. And this is done with our help desk. They'll walk you through a sample submission just so you can see our awesome STAR portal. We also have the STAR help desk that's available 11 hours a day. So they're there 10 a.m. to 9 p.m. Eastern time. And if you guys haven't checked out the chat, go ahead when you guys need assistance and press our STAR portal chat button. It will pop up and it will start as automated, because actually our automated chat bot, her name's Alexa in there. She can answer about half of the questions that you have. We've programmed the most frequently asked questions in there. So that's very helpful. But if she cannot answer your question, it will transfer you to a live person, an actual agent that will help you out. So check out the chat if you guys haven't checked that out yet. And I do see the question in the chat about, can we do a TBD? So yes, and we're going to get into that. So hang tight. I won't spoil it for everyone. We'll show you how to do a TBD. One cool thing about doing DPA with Orion specifically is you're only going to have one loan number in our portal. A lot of other lenders require you have the first and the second registered. With us, we just keep it simple. We just have the one loan number in the system on the first. We handle everything on the second for you behind the scenes so that you guys don't have to worry about that. And by the way, one question I get a lot is, can we just do the second DPA with you and not do the first with you? And no. So if you want down payment assistance with Chenoa, we've got to do both. We've got to do the first and the second mortgage. You're going to have 2 sets of disclosure packages every time the disclosures go out on DPA loans, and we do them all for you from the beginning all the way to the end. But you are going to have 2 sets of initial disclosures, one on the first, one on the second, 2 LEs, 2 1003s, 2 CDs, 2 closing packages. Again, we do all that for you so that you guys don't have to worry about how to disclose these. Also, if you haven't checked out our marketing studio, definitely check that out. It's something that I think is really special about using Orion. We know how important marketing is. And a lot of brokers tell us all the time, I want to do marketing. I know it's important. I don't have time to design this stuff. We did it for you. So when you're in our portal, just click on Marketing Studio at the top. And there's all kinds of stuff in there. There's social media posts for various programs that we have. There's flyers already designed for you. Everything is in both English and Spanish, so you can pick whichever one. And they're fully customizable. So even if you don't like how we've got something designed, you can change the photos. There's over 1 million copyright-free images in there. You can change the verbiage, what it actually says. You can completely repurpose a flyer. It's fully customizable. So get in there and check that out if you guys haven't. So let's go ahead and jump into the 3.5% Chenoa soft second. Now, I will preface this by saying this one, due to current market conditions with pricing recently changing, as you guys all know, over the past couple of weeks, pricing has generally worsened. These are at a discount. So this one I only recommend if there are seller contributions on the contract. We have another program that we're going to talk about next that is better if there are no seller contributions. And by the way, I know you guys are thinking there's not seller contributions out there. I promise you there are. I hear that all the time, but I promise we're getting files in with seller contributions. So I really just think it depends on the area and the real estate agents, that kind of thing. But we're definitely seeing them. I pinky promise. So this program right now with current pricing, I only recommend with seller contributions, and then we'll dive into the one where you don't need them next. So this is going to be the 3.5% soft second. This is for 600 credit scores and higher. They do need at least 1 score. We cannot do these on no score. And as mentioned, you're going to have the 96.5% FHA first mortgage, and then you're going to have the 3.5% DPA soft second held as a soft second mortgage with the CLTV at 100%. This second mortgage is going to have no monthly payments. So they're only going to be making a payment on the first mortgage. And the second mortgage is 0% with no payments due on the second. After 36 months, if they do choose to stay in the mortgage 36 months, it would be forgivable if they haven't had a 30-day late in the 36 months on the first mortgage. So that's kind of a cool feature. A lot of my brokers are refining them and paying these off, by the way, before the 36 months, and that's totally fine. You can do that if it benefits the borrower. But if they do stay in at 36 months, it would be forgivable. These do allow manual underwriting on this particular program. So you just want to, if you do get one that's a refer, which sometimes they do refer, send me or the scenarios desk the credit report, the DU, and let's look at it to make sure that we're meeting HUD guidelines on a manual. HUD says you can't have any installment lates at all in the past 12 months, no new non-medical collections, that kind of thing. So if it is a manual, send it to me before you submit it. Let's make sure that it works. DTIs, if they're in the lower score bracket, the 600 to 619, you can go up to 45%. There's no exceptions on that for that lower score bracket. 620 to 639, you can go up to 45 or even 50 with certain comp factors. And I'm going to email you guys out the guidelines so you can see what those comp factors are after the call. And then the 640 to 659, you can go up to 50% or 55 with certain comp factors. Of course, remember, if it's a manual, you can't go above 50. That's a HUD guideline if it's a manual. 660 and up is just per the DU or LP, whatever that it's okay with, we're okay with. This is great for, this product allows single family condos, manufactured homes, and even 2-unit on the soft second. And I do like to point that out. I think it's a really cool feature of the Chenoa down payment assistance on the soft second. So they can buy a primary 2-unit, live in one side, rent out the other side, and generate some rental income. I just think that's awesome. So I always like to stop and point that out on this program. Non-occupying co-borrowers are allowed on the soft second. As we mentioned, first-time home buyers are allowed, but they do not have to be a first-time home buyer. And concurrent ownership is allowed in with an acceptable explanation. What that means is if they own another property, or let's say they're going to retain their current residence and buy another residence with Chenoa, that's allowed under the soft second program, but we need to know that they're buying this as a primary, and we need a really good explanation. So that's required if they're going to own other properties. The lower credit scores, the 600 to 639, those do require a home buyer course, and Chenoa offers one that is free. So if you ever want that link, just for those lower scores, that's the only one it requires. Let me know. It's free to them. It's an hour. They don't have to do it in person or anything like that. So it's pretty awesome and easy to knock out. And this soft second does not allow high balance. So this is just normal FHA limits only. One thing that you have to keep in mind on this soft second is that the income is limited to 115% of the area median income. After the call, I'm going to send you out the link where you can check that. But basically what you're going to do is you're going to go to the site. You're going to see this maroon button here, and you're going to click that to view the income, what the average family median income is for that particular county. It'll have you select the state, the county. You're going to click view county calculations. Ignore everything on this side. It does not matter how many people are in the family. We are not even looking at asking about income on other family members like USDA does. We're not doing that. We're just taking the borrowers on our loan, and we're looking at this number, the one you're going to see on the left side. You're going to take that number, and you can go over that to 115% of that, which in this scenario would be 99,000. Most borrowers that are seeking down payment assistance will be within those caps. If they're not, and some of you may have had this happen in setup where we're checking, you submit the loan, we're checking the income that you've put on the 1003, and we say, hey, based on what you have on the 1003, it looks like they're over the caps. What do you want to do? There is a option through this exact same program with Chenoa. This one is the soft second. If they're over the income caps, then it would then be a repayable second. Instead of a soft second that has a 0% interest and no monthly payment, we would then ask you to choose a repayable option for that second mortgage, where they're basically borrowing the down payment and paying it back, similar to 100% financing. That's only if they're over those income caps. So let's say that your borrower makes $1 million a year, they need down payment assistance, fine, but it's going to be repayable down payment assistance. And the two choices on that second DPA would be a 30-year term with a 5% interest rate, or they could do a 10-year term on that second mortgage at a 0% interest rate. So they can even get that down payment assistance interest-free. Again, this program is only repayable if they're over the 115% income caps. I do want to remind you that when we're looking at the income, we're looking at the qualifying income that you're using to DTI qualify only. So let's say, for example, somebody is getting child support income, or they're getting a bonus, something like that, but you're not using it to qualify. We don't have to count it in the caps, which is nice. So just the qualifying income for our borrowers only is what we're doing here. Now, I'm going to show you why I'm telling you this one needs seller contributions at the moment. And it's because of the current pricing market. This was not the case a month ago or 2 months ago. So this is with the recent market changing, worsening as far as rates. That is the reason I'm telling you. So let me show you why. So you make sure when you're pricing these out, you put in FHA as the loan type, the purpose, you're going to put the 3.5% Chenoa fund soft second. It's going to automatically, our system is smart, put your CLTV at 100%. This goes down to 600 credit scores. These are all borrower paid comp. By the way, so these are capped at 1.5% borrower paid comp. You can charge a third-party processing fee on top of that. So keep that in mind as well. Chenoa does allow a third-party processing fee above the 1.5% comp. But these are actually discount points. So most of these are coming in at 5.25, and it's at a discount of about 1 point. That is why with current market conditions, I'm telling you this particular product is better with seller contributions. So Chenoa is going to pay the 3.5%. And what the seller contributions can be used to cover is that 1.5% borrower paid comp, because borrower paid comp is not included in the pricing, plus the 1 point discount. So let's just say you have like a 2.5% in seller contributions. Then that would cover your comp and the discount points. And then all the borrower is going to need at the closing table is their closing costs and prepaids. And by the way, gifts are eligible, other grants are eligible, even other DPA programs can be used in conjunction with Chenoa as long as they're eligible. So keep that in mind. But who DPA is really for in this market is somebody who has their closing costs and prepaid. So this is not for somebody who says, I have $500 in the bank, I have a contract with no seller contributions, can I get a mortgage? No. So this is really used to fill the gap for somebody who has some money saved up, but just not enough for to also pay their down payment. So now I want to show you, because I know a lot of people say they're not seeing seller contributions on the contract. So now I want to show you one that works very nicely without that discount that we just saw, and without the 1.5 comp having to be paid at the table. This particular product works great without seller contributions. So if you're one of those that's not seeing seller contributions, this is the one that you want to pay attention to. So this is actually going to be a 5% second mortgage. So the LTV will be 96.5, and the CLTV is going to be 101.5. Again, our system's going to structure that for you. Even if you don't have it structured that way in your LOS, not a problem. When you pull it in, we'll get it fixed for you. This particular one is for 640 credit scores and up. So the other program we looked at goes down to 600. This one requires a 640. And this one is repayable. So you definitely want to make sure that when you're looking at these borrowers, that the DTI is not so high that you can't also include that second mortgage. So that 5% is going to be held as a second mortgage. It's going to have a 10-year term on the second mortgage with a 6% rate on the second mortgage. And it does have to be included in the DTI. So you really want to keep that in mind if you have somebody that's higher up on the back end DTI. This rate advantage product does not allow manual underwriting. The other program we looked at did. This one does not. And the DTI can go up to 50%, but it cannot exceed 50%. So that is the absolute max. This one is for single families, condos, manufactured homes, but it does not allow a 2-unit like the soft second does. This one also does not allow non-occupying co-borrowers like the other one did. This allows first-time home buyers. They don't have to be a first-time home buyer, but they can be. And concurrent ownership is not allowed on this particular program. So I like to point that out. This one does not require a home buyer course. So that's kind of a perk on that one. And this rate advantage does allow high balance. So the soft second did not allow high balance. This one does allow high balance. So if you get any high balance DPA, this is the one that you want to put it in. And this goes higher on the income limit. So all the way up to 135%. So on the example that we looked at previously, you'll take this number here, it doesn't matter how many people are in the household, you're going to multiply by this number, It varies by county. So this one, I'm using the Atlanta area in this example. If you're in Southern California, the county, the average median income for the families varies by county. So you got to go and check out yours. Don't just think that this is going to be your limit too. You've got to go in and look up the county where the property is going to be purchased in. But in this example, we would take that 86,200, multiply it by 135%, and this would allow up to 116%. I'm sorry, 1,016,370. If they're over the cap, they're actually not eligible for this program. So in the soft second we looked at, there was an option if they were over the cap. This one does not have an option if they're over the cap. So please keep that in mind. Again, when we're looking at the income caps, we're only looking at the qualifying income for our borrowers. We're not looking at the entire family or anything like that. So let's look at a pricing example on these. So you're going to put in FHA for the loan type. Make sure you put in the 5% rate advantage. This is going to put the CLTV at 101.5. Keep in mind 640 is required for this program, 640 or higher. All borrower paid comp, you can charge a third-party processing fee on top of the 1.5% borrower paid comp. Here's the reason I like this one when you don't have seller contributions. So there's 5% assistance coming from Chenoa, but the down payment is 3.5% on an FHA loan. So that leaves an additional 1.5% towards closing costs. Keep in mind your comp is 1.5% borrower paid comp. So essentially how I like to think of these is that additional 1.5% towards closing costs that Chenoa is going to do pretty much just pays your 1.5% comp, so that all that's left is the borrower has to bring their closing costs and prepaid. So Chenoa will handle the down payment. Chenoa will cover 1.5% towards closing costs, which pays your comp. What's left is closing costs and prepaids. Now today, the pricing is at just a slight discount. A couple of days ago, it was at a quarter credit, but these over the last couple of weeks have kind of hovered right there at par. So 5.25 is going to be close to par. And you just have to keep in mind the borrower is going to need some funds to cover closing costs and prepaids. Gifts are allowed. Eligible grants and other DPA programs used in conjunction with this is allowed. But generally speaking, if you're looking at somebody who needs down payment assistance, you do want to make sure that unless they have a gift, that they do have money for closing costs and prepaids. We also have a Chenoa for conventional, although over the past couple of months after the pricing has deteriorated, these are at a discount. I still just want to quickly mention them in case that changed, because who knows that it could change over the next week or so. So I just still want to point out that we do have it available. So they can either choose HOMEREADY for that first mortgage or standard Fannie Mae for the first mortgage. All of the Chenoa conventional products are repayable, so that how it's going to be repaid is a 10-year term on that second mortgage with a rate that's just too higher than whatever the first is. So for example, if the rate on the first is 4%, the rate on the second would be 6%. This is for 620 scores and higher. The max assistance on these is 5%. The regular conventional has no limits on the income, but keep in mind, if you're going HOMEREADY, then you will need to be within 80% of the area median income. If they are doing Fannie Mae, the standard Fannie Mae on the first, they do have to be a first-time home buyer. That's actually not a Chenoa rule. That actually is a Fannie rule. So anytime you're going over 95% on the CLTV with a conventional loan, or the LTV, then they do have to be a first-time home buyer, but they don't if you're going HOMEREADY. So that's good to keep in mind. We cannot do conventional DPA as a manual, so you need it approved eligible. The DTI is just capped at whatever the AUS will take. And again, 1.5% borrower paid comp, and you can charge a third-party processing fee on top of that. Like I said, pricing is not like the best right now because it's at a discount, but similar to the example that we just looked at, you can do 5% assistance. So that 5% assistance, if you pair it with a 97% HomeReady DPA loan, then the 5% assistance could be used to pay their 3% down payment. Plus you would have 2% left over towards closing costs and prepaids, which it could pay this 1.25 discount point here. So it still may work. I know a lot of people are saying real estate agents are really wanting conventional contracts right now. So I still like to talk about this one because it's still a viable option, even though the pricing has deteriorated a little bit over the last couple of weeks. And like somebody asked, but I see the question in a more stable market, what's the typical pricing? So I've been here at Orion 2 years, and let me go back to the last screen. And the whole time up until the last couple of months, there's been a credit on these. So, you know, they would choose the rate. There's a pricing credit that can cover some of the closing costs. So these really and truly did work a lot better before the last month. So that's why I wanted to show you guys the ones that are still working great without seller contributions, like the 5% FHA rate advantage that we looked at. That one still works beautifully without seller contributions, as long as the borrower has enough to cover their closing costs and prepays. That's a great question. Hopefully pricing will level out, but I like to live in the here and now. So I like to show you guys what pricing is today. I don't want to live in the past or what we hope will happen in the future. I want to show you how it is right now. So this is what it looks like right now. Somebody asked, can we do TBD? Absolutely. So Orion does do full underwrites prior to contract. That can help the borrower secure a contract if they have a full underwrite from the lender. You'll keep the same loan number all the way through closing. Same turn times apply to these. No disclosures go out. Once they do go under contract later, then you'll upload the contract. Then we will issue disclosures at that point. And if you convert one of these TBD approvals into a contract within 30 days of the TBD approval, we will actually do an additional $500 lender credit on the final CD, which, you know, kind of reimburses them for their appraisal essentially. So that's definitely a perk. By the way, that's not automated. So if you do have a TBD that you've converted to a contract, let us know when we're balancing the CD so we can throw that $500 credit on there for you, because it's not automated. Now, I would encourage you to use the TBD as exactly what we said, so the borrowers can shop with confidence, so it can help them secure a contract. But if you're just not sure if the income will work, or if they've got a late in the last 12 months with a manual, if that will work, you actually don't need to submit that to get feedback on that. Just send that to me and our scenarios desk. Our scenarios desk typically answers within 3 business hours. So if you just want somebody to check your income calculation, or you're like, hey, they had a late after a bankruptcy, is this something you can consider? Send that specific question along with any supporting documentation to us, and we can answer that without you submitting the whole file. The reason I want to point that out is because we do monitor pull through on TBD. We do want you closing most of your TBD. And if we're getting TBD submissions in from you and you're not closing them, then we can just go in and turn off your ability to do TBD with us. And I don't want you to lose that. So that's why I say, if there's something specific on the credit or income, run it by us before you submit. For those of you who are not approved with us, we have an express approval option. So email me it's eharden. The email address is on your screen, at orionlending.com. I'll send you our express approval option, which is just a form telling us who you are, your W-9, where you want your lender pay comp selection. We don't pull your credit. And we approve you with logins within 3 business hours. You can send the full package that we normally require later before your first closing. So this is a way just to get you flipped on so you can start submitting loans to us and pricing loans with us as early as today with minimal documentation. So I know we covered a lot and I was going a million miles an hour. I do want to pause and see. I know Karen's been answering questions in the chat, so I don't even know if there are any questions left. But I do want to pause and see if anybody has questions. Karen Thompson, our National Underwriting Manager, is on the call as well. So if you have any questions that have not been answered, go ahead and put them in the chat and we can stay on and try to answer them. Great question. Is this going to be available? I did record this, so I am going to send out the recording after the call to everybody who was here, so that if you want to go back and reference it, absolutely. So I'll definitely give you guys the recording. If you don't have questions, I really appreciate you joining us today, and you can go ahead and fall off if you want, but Karen and I will hang out for a couple more minutes to see if anybody has questions that are not yet answered. And thank you guys for your time. Thank you for everybody that joined. I know that it's Friday, everybody's busy, so I truly appreciate you guys joining us today. And yes, Edwin, you can buy out the underwriting fee. So when you're in our pricing engine, there will be a little turquoise box for the lender fee buyout. So absolutely, you can buy that out of the pricing. The lender fee is higher for Chenoa than it is our other products. So our normal underwriting fee is usually $9.95 for other products. For Chenoa, it's $12.95, but you can buy that out of the pricing. Great question. And for conventional, they have to be a first-time home buyer if you're doing standard conventional on the first mortgage. If you're doing HOMEREADY on the first mortgage, they actually do not have to be a first-time home buyer. So that's a great question. And as far as Robert, I see your question on closing costs. It really depends on the state and the area and what month you're closing in. It kind of varies from area to area. So it's hard to say how much they would need, but really what you want to make sure the borrower can cover is their closing costs and prepaid. So this down payment assistance is generally for borrowers who have money for the normal closing costs and prepaids, but they do not have money for the down payment and the closing costs and prepaids. Down payment assistance is used to kind of fill the gap there. That's a great question. And absolutely, I will email the recording out to everybody. I'll also email you guys the guidelines to reference back after the call as well. And yes, I saw the question, can we talk offline? Absolutely. Bear with me if you're going to call me after the call, because after we do these, I usually get tons of phone calls. So if it takes me a little bit longer to call you back, please be patient with me. But absolutely, you guys can call me with questions. I would love that. And let's see if we're getting any more questions in. Great question, Matt, on training to create flyers. So you actually don't even have to create flyers on down payment assistance because we've already done it for you. So what you want to do is just log into our STAR portal, click on Marketing Studio at the top right of your screen. You can search by Chenoa, for example, and it will pop up all of the flyers. We've designed everything for you. The only thing you need to do in there is save your contact information. You can put your photo in, your name, your NMLS, your phone number, email, all of that. The system will save it so you don't have to type it in every time. It'll auto-populate into your flyers. And we've done all the hard work for you. There's all kinds of marketing materials on down payment assistance, social media posts, all kinds of great stuff. So definitely go in there, check it out. It's all customizable. And I'm trying to see. Okay. And yes, Taylor, if there are not seller contributions on the contract, then the only one I would recommend for today, as of the way pricing is currently, is the 5% rate advantage, and specifically the rate advantage, not any of the 5% of all the other. There's a lot of options in the drop down when you guys are pricing these or submitting these. The one that you want to select, if there are not seller contributions, is the 5% rate advantage, because that will pay the 3.5% down payment plus 1.5 towards closing costs, which essentially pays your 1.5 comp. And then that one is not at a significant discount. It kind of tends to hover right around par pricing with current market conditions. And then all they need to bring is their closing costs and prepaids. And Maria, you don't need to, if you want to shoot me an email to the email address on your screen, I'll shoot you over some sample flyers if you want to look at one. But in order for you guys to customize the flyers with your information on it, then you would need to be an approved partner with us. But like I said, if you're not approved with us, we can get you approved very quickly without the full broker package with our express option, which is just a form, not the whole package. No supporting documents, no credit pull, and where you want your lender paid comp, we go ahead and issue approvals. Then the actual broker package can come later before your first closing, but that does give you access to everything, including our marketing studio. That's a great question. And will we provide guides on loan submissions and processing? That's a great question, Hector. I really can't stress enough that you're not really going to need much assistance, because when you really can have these in your LOS as just a normal FHA loan. When you pull in your 3.4 to our system, make sure you select the Chenoa product as the loan purpose. Our system is going to structure it for you. There's nothing you need to do on that DPA second mortgage. We do all of that for you. So essentially, from your processing standpoint, you're kind of just treating it as any other old FHA loan and just getting us the conditions that are going to be on your approval. So we keep it as easy as possible. A credit pull for us, or a credit. Okay, so when I was mentioning the credit pull, I was talking about to become an approved broker partner with us. When you do the express option, just so we can go ahead and issue logins, we don't pull broker credit at that time. And these are great questions coming in. I didn't expect to get this much participation. So thank you guys for listening and for participating so much. This is awesome. And by the way, if we missed your question earlier, I wasn't paying attention to the chat. I know Karen was doing a fantastic job, but if you had a question that we didn't answer, put it back in there to us now so it pops back up so we can see it. And we will hang out I don't see any new questions coming in. I'll give it just a few more seconds to see if anybody has a question. And if not, we'll go ahead and let you guys get back to your Friday. That's a great question on the condos. So we do FHA single condo approvals. So if it's conventional, it has to, if you're doing conventional DPA, it has to meet conventional guidelines. So it would we would not allow non-warrantable, since that first mortgage is a conventional mortgage. It has to meet conventional guidelines. If you're doing FHA and the condo is not approved, shoot me an email and I'll send you some instructions on what we require to get an FHA condo looked at and approved. But we do FHA condo single unit approvals. And Riley, I actually have your login, so I'm going to make myself a note and I will send it to you right after the call. But I actually do have, yes, I know you guys were recently approved, and there's a lot of you, so we need to get a lot of logins out, but I am making myself a note and I will send you your login right after the call. Yes, and thank you, Karen. We do have, if you guys have not heard about our DSCR no income doc investor loan that we're doing, that's completely unrelated to down payment assistance, please shoot me an email and let me send you some information on that. I actually did a training on that a couple of weeks ago. I can send you the recording, but Orion has a fantastic non-QM DSCR investor cash flow that is no employment, no income, no DTI, no DU. Those are awesome loans for investor occupancy. We do purchase rate and term cash out with some of the best pricing in the market by far. It does allow non-warrantable condos. So if you guys want info on that, shoot me an email and I will send you over that training, that recorded webinar on that one. And we'll hang out just a couple more minutes to see if anybody else has any questions. And yes, I know, Karen, I was just thinking the same thing. There's great participation on this call. That's awesome. Lots of people awake and paying attention on a Friday. And I know that a lot of people who are not looking at down payment assistance are looking at down payment assistance now, because it seems like the market is calming down a little bit, not so crazy. And so brokers and loan officers are able to look at some products that they weren't previously looking at. So that this is awesome. And Hector, if you, anybody who needs a login, if you will please shoot me an email to the email address listed on your screen, I will get a login to you as soon as possible today. Want to make sure you guys are able to jump in and start using our portal. Like I mentioned, our portal is fantastic. It is awesome, awesome, awesome. It really, you know, technology either works for you or against you, and ours is definitely one of those that works for you. It's a awesome platform for our brokers. So I don't see any more questions coming through. If you think of something after the call, please shoot me an email, call me. Please be patient with me because my phone may absolutely blow up after this webinar with questions. So I will return everybody's call as quickly as possible. And thank you, Karen. Thank you, Karen, so much for joining us. We really appreciate you being on the call. And I will make sure I get the recording and the guidelines out to everyone. Thank you guys again for joining, and have a fantastic Friday.